Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Today is November 5th, 2025. A lot going on in the soybean market. We have a lot to cover today. My name is Aaron Edwards with Santos Springs. We're going to jump into the analysis part in just a little bit, but first want to start with that recommendation, kind of that call to action, and we have some important steps to take on soybean sales. So I'm sharing the screen. The first thing, sell 30% of quarter four soybeans, get to 80%. Last week, recommended sales of 50% of our quarter four soybeans, an additional 30% this week. Next point, sell 50% of quarter one soybeans. Last week, I recommended 25%. This week, an additional 50% of quarter one soybeans. That's soybeans that will be moved until the end of March. So you should be at 75%. And we are starting on new crop 2026 soybean sales. I know it's early, right? We're just picking this year's crop, but I'm going to go through the logic and these are the recommendations. So let me jump into the analysis. Before we talk about just the charts and the technical analysis, I want to talk a little bit about South America and what's going on down there. So these 12 states represent 96% of Brazil's soybean production. And this is the big number we want to look at. 5-year average, it was 54.7% planted by 1st of November. This year, they are at 47.1%. So the number that I always, as a proxy, I always say, hey, 30% of Brazil's soybeans need to be planted by the end of October to really give them that window on double crop corn. You can see their average historically, they've kind of been pushing planting gradually earlier. And 2 of the last 5 years, they were able to get very strong, fast planting. So they kind of even sped up that curve a little bit. So typically they're past the halfway mark by the end of October, but they really need to get to that 30% mark to give themselves that window on double crop corn. So yes, they are behind, 7 percentage points behind, ballpark, almost 8. But they are probably enough has been planted to not affect double crop corn acreage. In a nutshell, that's that. A few things I would highlight. Mato Grosso cut their gap. A third of Brazil's soybeans are produced in this state. All of these states basically cut their gap. Most of them did. Mato Grosso do Sul is only 6 percentage points behind. Goiás caught up a little bit. Still got some work to do. So they're still behind, but it's not, they're catching up. What's the next headline? Probably Brazil gets enough planted. The other thing that's important, I won't show weather today, but The early planting is important in Brazil because of double crop corn. But as far as optimal yields on soybeans, just think about their rainy season. The places that can do double crop corn, they're going to pick these beans in January, February, and then they're going to plant them, and then their corn needs to make it through pollination. So they really expect rains into March and April because they let's say you plant in February, early February, you have to get your corn through pollination with adequate moisture. You want more later on, but you can plant November soybeans and have great yields because you still have that rain in most countries. So there are some spots that I'm a little bit concerned, but I talked to a weather expert. His whole business is providing reports to banks on the size of the South American crop. He works out of Brazil, lives in Brazil, works with Brazilian banks. They're trying to assess, basically default risk of farmers. And he actually, their projections, whether you buy into this or not, all your geo, the weather, the soil moisture, it's all geo imaging stuff based on previous numbers. Their projection is actually a bigger crop than the official, at least the last numbers we saw out of the USDA. And if you think of risk, the fact that they have delayed planting, since they got over the hurdle of double crop corn, spreading out a crop actually dilutes risk a little bit. So I think, for all that's to say, the bullish story out of South America might actually be this delay to planting. That doesn't mean they're going to have a shorter crop or even reduced acreage, in my opinion. If they were farther behind, I might be a little bit concerned as far as their double crop corn. The next image we want to go over is, let me just share it here real quick. It's that pyramid. We always talk about the market plan portfolio, seasonals, funds, technicals. Government is shut down, so we don't have updated positions of the funds. Caveat on that, we will be getting a USDA report in November on the 14th. Good news. The action, that's those soybean sales. So let's look at the soybean charts. And let me grab a marker here so we can look at the soybean charts. Let's see if we can get black. There we go, black. So this is, we wanted to do a side-by-side of corn and beans. We're going to look at it a little bit differently. We don't have the position of funds. So first we're going to look at March soybeans and then March corn. So let's start with soybeans and we'll go to corn. January doesn't look too different. The numbers are different, but the graph isn't too different. And November is basically done, right? We're running out of time on that. A couple things I wanted to point out on the soybean chart. First of all, this is the 200-day moving average. The fact that that's moving up, that's nice. This is the 20-day moving average, and that's also encouraging. Do you remember that I just now said there will be a USDA report on the 14th of November? So let me make this a yellow line, and let's just go to the middle of November. Let's see if we can get that right there to the middle of November. Are you gonna work with us? There we go. Might even be a little bit off center. But when we get to that yellow line, we will have a USDA report. We did not have the October report, but we will have that USDA report. What typically happens, a very usual pattern, is that at USDA reports, we're sitting on the 20-day moving average. That's a very normal thing to happen. Where will that 20-day moving average be? And what will it look like? So if this green bar chops sideways, if we hold our ground, the 20-day moving average might get up to 1120 on the March contract, maybe. So even if we were to chop, so if we keep going up, let's say that this market keeps going up, then the 20-day moving average, it won't catch up because it's going up and it's lagging. But it could, it could maybe, let's get that in blue. It could maybe go up. If this keeps going up, that's possible. If we stop going up, and spoiler, we have stopped going up. If we stop going up, then the tendency, if it's going to sit at the 20-day moving average, the sideways tendency would actually be more of a down tendency to where we need to lose. Now, in that drawing, that's only about 15 cents, but it is 15 cents. I mean, that's a pretty significant fall. That's that. And the other thing is, this is go back to black here. It's very small, but you can kind of, if we zoom in on that, I don't know if it'll let me zoom in on that. Yeah. If you zoom in on that, you can actually see how we have had the lower highs. And again, today we didn't take out those highs either. So we had 2 sessions ago, we put in a high. Yesterday's trade, we couldn't take it out. So far today, we haven't taken it out. Now, maybe that turns around, but it would not surprise me at all if you'd say, Aaron, what's going to happen? What I think is the most likely thing to happen is that this 20-day moving average is going to try to move up, but pretty quickly, this market's going to try to find it. So somewhere in here, maybe close to $11, we will be sitting close to the 20-day moving average and close to that report on the 14th. And then we'll have a big decision. Is this a buy or a sell? Are beans really going to take off and head back up? Or was this just a head fake and it comes back down? Also, it's important to note, for what it's worth, that we do have a gap in the market right here. So it could happen all at once that we fill that gap, but it'll be very interesting if we test the 20-day moving average before that gap. It'll just be interesting. My opinion, for what it's worth, my opinion is that beans will very likely, this last 30 cents up, we will give it back pretty quickly, and we'll be sitting fairly close to $11 when that report comes out on the 14th. And time will tell if that's a buy or a sell, but let's keep moving forward. Personally, I think beans have somewhat run out of steam short term. That doesn't mean they can't go higher later, but I think we're going to give up a fair share. Corn is very stable. This is March corn. And if we draw that same pattern, this is the 20-day moving average. We're very comfortable above the 20-day. Still haven't gotten through the 200-day. I expect that we'll just gradually see this corn go up. Maybe it goes on a big old rally like beans, but we don't have much of a reason for it to rally shorter term. So I think sideways to up through the end of the year is the most likely. If we can get a little something out of double crop corn, a little friendly demand, a number on a USDA report that gives us a little excitement, get some speculators buying, then maybe we get a little bit faster rally, similar to what it was last year, where we went up and got close to $5, got $5. But basically, corn is stable, but I'm not super optimistic on it. I know it's early. I know you're just picking this crop and numbers are tight and all that, but we have to start looking at next year. And there's 2 things that I want to point out. First one is with the soybeans. I'm going to make this, let's do red here for the sake of urgency. I don't even need to draw it, but I will draw the line here. Okay. For you to have a better price than the highs from 2 days ago or on November 26th soybeans, you would have to go back to June of 2024. June of 2024. This is the best price for 2026 soybeans that we've had since spring of 24. Let's just let that sink in. Now, is it possible that we're going to go back and we're going to prices that we did. We're going to 12, we're going to 13. Yes, that is possible. But to not start averaging into some new crop beans at the best price in 18 months, that doesn't seem like sound risk management to me. Sound risk management to me is to say, let's get some beans sold with an 11 in front of them. We have more to sell later, but let's get a stake in the ground at 11. And I know for cash markets that'll be lower, but talking board of trade price. I think this is an opportunity on new crop, and the recommendation was 30%. This is an opportunity that we need to start selling into on new crop, okay? The other thing that for me just adds a little bit to that is we'll do some math here. Just remember that's 1107, right? 1107. Now let's go look at new crop corn. So if we were to say, hey, what's the best price since June for the new crop? We would be talking about corn that's, let's just pick a line here, pick a number, maybe around 480. We're not. We're at 466. So I'm not recommending new crop corn sales. It's the ratio, right? Let's do some math. That soy divided by corn, that ratio, I talk about that range being 2.3 to 2.7. Some people say a better range for that ratio is 2.4 to 2.6, but I give it a little bit wider range. So let's just figure this up. I said, remember that 1107 number? So we have 1107 divided by 466. That's going to give us roughly 2.3. We are at the lower end of that ratio. Beans to corn, we're at the lower end of that ratio. So what's the thought process? Let's say that you are a speculator, right? You're not a hedger. You just bought beans 10 days ago, 2 weeks ago, and you're up 50 cents. And then 30 cents, 20 cents, whatever it is. You got to run up. There's a report 10 days from now. Corn didn't follow the rally up. There's a bullish story for beans, but you're up. What do you want to do? Something that I think would make a tremendous amount of sense is flip your long to short on the beans and then buy corn, get that ratio back down to the middle of the range. And, it's a fairly safe, it's a play to where you made money going up on the beans. You'll probably make money coming down. The ratio's off. Markets work the way they work because agents are making rational decisions. So maybe emotional, but ideally rational decisions. The bean rally is a little bit overdone based on that. Now, maybe there's a buy for beans down the road, but my opinion, what I think is the most likely, is that beans are going to pull back a little bit. And maybe corn rallies. I do think that if beans are just going to go straight up, we're going to see corn pulling up as well. But that ratio's it's at an extreme, right? Some people would say it's already overdone. For me, 2.3 is still in the normal range. We've seen crazier things, and that doesn't mean it needs to correct in a session or two. Maybe it takes a month, but I would expect to see soybeans sideways to down and corn sideways to up, and that ratio to come together on the new crop. Pragmatically, as a farmer, let's just sell some new crop beans. That's the takeaway for me. And make sure you're getting your quarter 4 and your quarter 1 beans. I have not made recommendations to sell quarter 2 or quarter 3 of 26 soybeans. So if you have your bins full and you can store those till April, May, June, July, August, not touching those, right? Our quarter 2 and our quarter 3 beans, if they're tucked away in the bin and you can wait till next spring, we're not touching those. Hopefully we do go to 13, right? But just as we're looking at the end of this year and then harvest in South America the first part of next year, as we look at kind of that scenario, well, we got a bullish story out of Brazil and we've got the best price in 18 months. Let's make sure we're making a good dent on our sales on those two over the next 6 months. And let's go back now to our to just kind of talk through the thought process. Seasonally, it's neutral for corn, and it's actually, we're in November, it's a sell for soybeans because of the South American growing season. The trend for corn is up, we're above the 20-day moving average. The trend for beans is up, we're way above the 20-day moving average. Basis levels are friendly. However, it's normal for basis to recover post-harvest. So it's difficult to know if the basis strengthening is evidence of tight supplies and strong demand, or if it's the natural post-harvest bump that we seasonally get in basis. South American basis for new crop has gone down in the same proportion that the Chicago Board of Trade has gone up. Another way to think about that is the price in dollars. The price in dollars for new crop in South America really hasn't changed. Chicago went up, basis came down. Technical considerations. The soybean gap soybean market gapped up. The bulls would say this is evidence that beans have a lot of room to the upside. The bears would say that gap likely gets filled and we will be under $11 pretty soon. The corn market is technically very stable in an uptrend, and I expect it to continue to trade sideways to up at least until the November 14th USDA report. And we do have a question. I will answer that question, and then that'll be it for this week. So the question, should I re-own soybeans that I sold close to $11? Sold $11 soybeans, close to $11, maybe $10.85 to $10.90. It's been a crazy run up. So it's tough. You make a sale last week, $10.80, $10.90, $11, and then it goes to $11.30, $11.40. Should I re-own them? I mean, I just missed 30 cents. This is huge. This is a really big thing. Should I re-own them now? Is it going to 12? Did I miss out? I think we all remember years like 2020 where the best thing to do was just close your eyes and buy, and that was true until sometime in the spring, right? It just goes up and up and up. And the balance sheet did get tighter with if you accept that the China deal will those numbers will carry through. So 12 million metric tons for this year, and then 25 for, I believe, the next 3 or 2. The balance sheet does get a little bit tighter, but we kind of saw this in corn, right? Markets correct themselves. Number one, South America has delayed planting. I expect it's still going to be a really big crop. Number two, the ratio between soybeans and corn favors planting beans over corn. If we look at new crop, and we saw the inverse of this last year, where corn went up to $5, beans didn't, and guess what? We got a lot of corn, right? So my opinion is that this market is likely going to correct in a way that soybeans will be pressured back down. Let's say that markets are very stable. We lose 20, 30 cents. They come to the 20-day move and they're staying in an uptrend. They really aren't falling down. 2-3 weeks have gone by. I do think maybe buying some calls makes some sense. But even though the excitement is in the bean market, I actually think the friendlier buy, if you're looking for an ownership position, would actually be on the corn. It's kind of a sleeping market that's well supported. I think buying some old crop corn is very likely. The next wave of uncertainty could hit corn more than beans, since we are already getting a story. So I would be cautious about reowning soybeans. Like I said, this is maybe it turns around and keeps going straight up. I think a correction at least 20 to 30 cents down is probably the rest of this week into next week. That's probably more likely than it just rallying up to $12. So hope you have a great rest of your week. Let's take care of our grain sales. Not all time is equal. I know it's tough. They aren't great prices, but there's a rhyme and a reason to what we do, and let's follow suit and get our work done. Be safe.